Is natural gas ready to double in price this winter? Let's call it a natural gas explosion. Well, I have some pretty compelling evidence to suggest that nat gas may be a very high probability trade this winter, and it's going to come down to, of course, the charts, but also because of supply-demand economics. There's a lot of factors here, and I think this is a really exciting opportunity for investors to consider, so let's get started. So what I want to start off with is Economics 101. Now, I wish more people understood the basics of supply and demand. This comes in all walks of life, from buying groceries to voting. So let's understand that when we have any price, it doesn't matter whether it's a can of tomatoes or a cubic meter of gas. It all comes down to supply and demand. And what we have here with natural gas is a situation where demand is going to pick up in the face of falling supply. Here in North America, we are the largest consumer of natural gas in the world. In fact, I read the other day, I believe it was something like 65 or 64% of all buildings, households, commercial outfits are heated through natural gas. And we're a big continent with lots and lots of buildings, so huge demand. And we are now facing a higher expectation than normal for an extremely cold January and on through the winter. So we are looking at forecasts that suggest that this January will be close to record lows in temperatures. That's going to create more demand in North America. Now let's talk a little bit about supply. Well, some of you may have read that Russia is actually cutting their LNG gas supply, which is a pipeline that runs through Ukraine to Europe. Well, Europe is also a major consumer of natural gas. Well, if that pipeline is cut, we are talking about less supply, same demand, or more in Europe. That's going to, by itself, push prices up. Then we also have going back to North America, the cold temperatures. Well, ironically, cold temperatures push demand for natural gas up, but it also creates a hardship on supply because the infrastructure surrounding the wells and whatnot that when we're producing natural gas can often freeze up. Now, how's that for irony? You need it more, and that's when it's harder to make. So we have a situation where gas prices are going to be squeezed because of demand in North America, and they're also going to be squeezed because of supply constraints in Europe, which will lower worldwide supply of natural gas, and of course, the freezing temperature problems on our infrastructure. So it's the perfect storm as a setup. Here we have a chart of spot price on natural gas. And what we're seeing here, you can see I've drawn on the chart a big red horizontal line, and that line ends up around $3.50 or thereabouts. You'll notice one thing about my technical analysis: I don't worry about the pennies. I like to give you general areas of support and resistance or trend lines. So, talking about precise though, you can see here the principle of old resistance becoming new support, and then again coming back to becoming new resistance. So $3.50 or thereabouts is obviously an extremely important point for nat gas. Now, I'm looking at this consolidation as a point that needs to be broken out, and I mentioned this on my oil and gas video about a month ago. You might want to take a look at that video because I did suggest that if nat gas breaks out, that's going to be a very exciting opportunity. You'll find the link below. If natural gas, which does appear, if we zoom in, it does appear to be breaking out. If that price remains the same, then you can see the next levels of support resistance come in around $6 to $10. Well, let's do a little bit of quick math here. If it's around $3.60 now, and we broke over $6.50 and then $10, that's a double or darn near a triple on price from a technical perspective. The real question is, will this breakout hold? And that's to be seen. But again, we go back to those supply-demand dynamics I just spoke about, and you've got some pretty simple math there. If it remains cold and if supply continues to be squeezed, we're going to see that 350 plus hold. And that spells what I think pretty good opportunity for investors to exercise a very profitable trade on nat gas over the winter. You want to see that breakout hold, but I think it's a very exciting potential opportunity. Let's take a look at seasonality. Now, again, on my video a month ago, I did talk a little bit about seasonality, but as a refresher, we'll see that in the first 40 days or so, nat gas is actually not so great from a seasonal perspective. It tends to underperform during that part of the year. So that's what's going against it. But remember, supply demand overrules everything. So normally seasonality is not favorable. And people might ask, well, why wouldn't seasonality be good for natural gas when the temperatures are the coldest, which is generally January and February, at least here in North America? Well, the reason is because producers typically stockpile ahead of that. So it's kind of a done deal after that point, and gas will tend to pull back a bit after the actual cold season begins. Now, if we go back to the seasonal chart, you'll see that from around the 50th day and on, that's the sweet spot for natural gas. It tends to rise quite aggressively from around March and well into the spring. Well, what about the producers? I want to look at the nat gas producers, and probably the best representation of actual nat gas producers is the First Trust Natural Gas ETF. It's the only ETF that I'm aware of that focuses exclusively and only on natural gas producers. Well, that ETF, as you can see here on the chart, has been stuck in a sideways range for the better part of 2 years. It's actually been a great swing trading tool. It moves somewhere between 21 and 28 over and over and over again. And as you know from any of my books and courses, I really like swing trading because it's pretty straightforward. You know where your stop point is, where you're going to get out if the trade goes wrong, and you know where your profit point is. You know where you're going to get out if the trade goes right. The problem for longer term investors is this chart will not break out unless natural gas, the futures contract, as we saw at the beginning of this video, stays above 350. So investors are not convinced that that's going to happen, and that's one factor behind keeping the producers subdued. But also, profitability doesn't happen the minute natural gas moves over 350. They need to see consistent pricing over 350, so their profitability actually does extend, and therefore the producers will reflect that through a higher price on the stocks themselves. But that's going to take a while, and it's going to take a sustainable move through the spot price on natural gas, as I said, holding well above 350 and higher. In the meantime, let's look, and I'm going to just back up the lines here a little bit. Let's look at where we need to see a breakout on this chart. Well, somewhere around $27, $28, as I said. We're not there yet. It needs to break out, but let's keep an eye. Now, for those of you who like to buy individual stocks, one of the things that I teach in my technical analysis online course is that you can take an ETF that you like the look of, and you can uncover the components of that ETF and chart them individually. Now, I'm not going to do that in today's video, but what I've done here is I'm showing on the screen a top 10 listing of the natural gas stocks that comprise the FCG ETF. Just a quick few names that some of you might be familiar with: Occidental Petroleum, ConocoPhillips, and that kind of thing, Diamondback Energy. These are stocks that I personally have traded in the past. So what you want to do is, if you like trading the individual stocks more than just buying an ETF, you can look at those individual stocks for new ideas. Either way, at the end of the day, we've got a perfect supply-demand setup and a perfect breakout setup for natural gas to possibly double over the next few months. Now, I'm not going to make any predictions. I never predict, I only prepare. And I'm prepared to move aggressively on natural gas as if and when that level of over 350 maintains for at least another couple of weeks. So keep an eye, but I think there's great opportunity. And the wonderful thing about this kind of trade is you know where your stop losses are. If the trade doesn't work out, if it doesn't rise the way we hope it does, you can always get out of the trade, and it's pretty easy to spot the supply demand points or the support resistance points on the charts by looking at those consolidation patterns. I hope this video helps, and I do believe that natural gas is offering a very interesting opportunity for investors to consider over this winter. Thanks for watching, and be sure to like and subscribe this video and tell your friends.